To be a successful trader, you got to have the best strategy ever. And this strategy I'm going to be sharing with you today, it's called price expansion model. And this is spectacular stuff because this will be the easiest strategy that you could choose from to make the best gains. So with this easy strategy here, I'm going to go step by step. This is a 3-step process, and then you have your entry. So let's go ahead, and here are our rules here. So our PEM strategy is going to imply of determining overall trend, right? Is it bullish or bearish, and why is it showing that? The next thing is price in a higher time frame fair value gap. It has to be in order for this to work. Scale down to 5 minute, and that's when you go to your targets. So let's go ahead and run this down here, as well as your targets, you guys. It's going to be simply a market structure shift. If you don't know what that is, I'm going to explain that to you, so don't you worry. Targeting opposing imbalances or opposing highs. And I'm going to run this down for you so you have the complete concept and have the complete rules right here. So for the first thing we're going to do, you guys, is to determine overall trend. Is it showing bullish or bearish moves? We're going to go ahead and start with the daily time frame here. As you can see, we have this nice low here followed by this nice uptrend. Obviously, we're in an uptrend here after this downtrend. What is price respecting? Well, we have this big fair value gap here on the daily, which price has wicked into, created a nice big wick here at the end of the day on Friday. And then we also have this volume imbalance here. So again, we have this fair value gap here. Volume imbalance. Price could potentially come to that volume imbalance. However, I see that we're respecting this fair value gap with a nice wick. That's how I know I'm bullish. So for the daily, I'm going to be bullish because we're inside this fair value gap, wicked into it nicely. Now, since we're on the 1 hour time frame, we're bullish because we see here that we hit that daily fair value gap and we rejected from it, leading into an uptrend, right? So now ask yourself, is price in a higher time frame fair value gap? Well, let's go ahead and see here. We have this fair value gap, this 1 hour fair value gap that price is in. Pretty simple. So we are bullish because of the daily fair value gap here, price bounced off from, and then on the 1 hour, price is inside a 1 hour fair value gap. We're bullish off this fair value gap. So what I'm going to expect is for price to either continuation lower inside this fair value gap and test this range and then reverse from it, or however, we could just see it reverse here, just like this, or price could come in a deep retracement of this area, reverse, or we could have consolidation, then reverse. However, we're going to expect that this market is bullish and price is in a higher time frame fair value gap because price is. That's how we know price is bullish. So we're going to go ahead and scale down to the 5 minute. Pretty simple. Those are our 2 rules. Let's go ahead and do our scale down to the 5 minute. So as you can see, we're on a 5 minute time frame. We're inside that 1 hour fair value gap now. We're going to go ahead and wait for a market structure shift. Let's see if we create a nice market structure shift right here. As you guys can see here, right, we have a low, we have a retrace up, we have another low, and then we have basically from this retrace, I want to see price close above, which we did here. This exactly would be my entry. We could put our low at the recent low or underneath an imbalance, which we have this fair value gap here. We could put this underneath here, or however I do like it here just for safety at a swing low. Then what we could do is target what? Our imbalances or opposing highs. If we look here, so basically what we're going to look for, we're going to see if price could come up here, hit this high, and then targeting these imbalances. So we're going to mark out our past fair value gaps here on the smaller time frame of the 5 minute. So these are going to be basically our areas of interest where price could go to. Just going to mark these out. All right, we're going to go ahead and buy the market here. We're just going to see what happens. Price comes up. Because of our market structure shift on the 5 minute, this is nice and strong value here that price could actually see how price actually retraced inside this fair value gap. So again, you can put your stop loss below this fair value gap because it won't hit it. because this is protecting here. However, you don't want your stops here because look at it would have stopped you out here, right? So your stops could either be below this imbalance or a swing low. Your take profit, first one would be here, second would be here, third will be at this high. All right, so we'll just see how this plays out here. Price came down, we tested this imbalance. We know we're bullish. Takes out this high. Pricing comes up. There's your first partial here. We're going to go ahead and take one position off here for a profit. And then we could put our stop loss break even. Once you do that, now we're just going to wait and see where price would go to. Price it looks like price is attracted this high. Boom, there you go. And that is your trade. So that will be around 1 to 2.87 risk reward. Nothing too crazy. However, this is the easiest strategy out there, and we're simply just determining the overall trend. Is price showing bullish or bearish moves? Okay. Is price in a higher time frame fair value gap? Scale down to the 5-minute. Pretty simple. And targets and your entry is going to be market structure shift with a targeting imbalances or opposing highs. We have two imbalances here, targeting our first one, partial, second one up here, taking full profit. That is your trade. Pretty simple. All right, guys. So now here's the bearish version of this. So I changed one thing for the targets and entry. All you're going to be looking for is targeting imbalances, opposing imbalances, and opposing lows. Basically goes to highs to lows because you're bearish. So now you're going to be targeting opposing lows. Pretty simple. Let's go ahead and identify this. So I'm going to go ahead and show you how you don't necessarily need to go with a daily chart every time with this strategy. You could do different time frames as long as you have a exact bullish and bearish overall trend that you know where price kind of is referring to and bouncing off from. As long as it's kind of clear, you could do any sort of, you could do the 1 hour, you could do your daily bias on the 15-minute for more scalping on the 1 minute. You could also scale down to the 1 to 5 minute for an entry, but I just find 5-minute for market structure shifts. Market structure shifts on the 5-minute relatively to be the most respected. So I would stick with the 5-minute if I were you. If you want to go down, you always can. Just know my win rate and my back testing is always from the 5-minute. So let's go ahead and identify this. As you can see, we're on the 1 hour time frame. Price right now looks like we have this nice high and low. I'm going to go ahead and identify the price leg. So we're going to take our Fibonacci tool. I'm going to take the high and the low of this. We're going to kind of use this as a tool where price is kind of bearish here. As you can see, it's fading out, really consolidating here. Price came up, took out all these small liquidities here. Again, came down and created this crazy price leg here. So I want to see price retrace into somewhat in this zone here, the 71 mark and the 0.5 mark here. And basically what I'm looking for is a reversal because we have a higher time frame fair value gap on the 1 hour. As you can see, we have this huge fair value gap here. So I want to see price respect this fair value gap, continue lower inside this zone here. This is called our OTE as well. So go ahead, if you guys want to go ahead and copy this, you can. So this is the settings. And yeah, so basically that is our bias. However, we did reach the internal low. I feel like these fair value gaps in here could still be retested. So we could probably see this low being swept again after we're in this. So we're kind of just expecting price to go like this. Boom. Kind of something like this. Or price could rebalance here first before continuing. Right? So we have two possibilities here, which gives us a nice framework for our bias. So now let's go ahead and drop down to the 5-minute. So now it looks like price on the 5-minute actually has ran into some of our zone here. What we're going to be looking for here is a market structure shift. We have this high point here, as you can see. we're going to mark out this low here. And what I want to see basically is a run down to this low, and I want to see a nice displacement just like this. And now we can go ahead and sell here. And once we sell right here, we can go ahead and put our stops at this swing high here or at above an imbalance. I'm going to put it right above this imbalance, and we're going to target these imbalances here. We have this imbalance. What is going on? What is happening there? With this imbalance, and we also have this imbalance. So for a proper risk reward, what I'm looking for is actually, since we got our entry here, I'm going to put our stops above. Stops will go at this candlestick high above this imbalance, targeting here. It's just a nice little one-on-one. Let's go ahead and see how this plays out here. Actually hits the low here. Boom, and there it is. That's a 1.48, and we could actually keep targeting these lows as well. As you can see, price does eventually hit this low, and will price hit this low. And it does not. It looks like, so basically going to be taking your position off here to 1.2.15 risk reward. Pretty amazing strategy, if you don't mind me asking. It's literally not too hard of a strategy. Alright guys, with that being said, that's going to be it to this video. If you guys did like this, I invite you to join my community down below in the link in the description. Go ahead and join my Discord community, and if you have any questions or anything that you need to ask me, feel free to ask me there, and I can get in touch, as well as the comments down below. Hit the like, hit that subscribe, guys. Take care, and this is just amazing strategy overall. This is the PEM strategy, which is the price expansion model. This is the easiest strategy I have on my channel, basically identifying the trend and is it in a higher time frame for value gap, and that's when you instantly scale down the 5-minute, and that's where you're going to look for a market structure shift, because market structure shifts in the 5-minute are more reliable and more, they respect more than lower time frame market structure shifts below the 5-minute. So with that being said, go ahead and take a picture of this, screenshot this, whatever you need to do, and apply this in your trading and back test this first, and make sure that you understand this concept and understand how to actually develop your trend. What is it showing you? What is it? Is it bullish? Is it bearish? You're kind of using a lot of fair value gaps for the strategy. It's an amazing strategy. With that being said, so if you have any questions, let me know down below, guys. Thank you for watching, and take care. Trade on. I'm here with you all the way. Peace out.